What's going on, guys? It's Matt Fractal back with another video. If you're new to the channel, please hit the like button, subscribe, and comment if you find any value at the end of this video. As you know, we get straight into the videos, but it is a new month, so welcome to June 2024. It's the last month of the second quarter, and I'm just here today to show you guys a trade that I took on the US dollar versus the Canadian dollar, and it's basically going over ranges. So let's hop into the video. But first, let's go to the dollar index and we'll do some analysis. Let me clean up my chart. All right, cool. We'll go up to a monthly since it's a new month, and we will look at it, the market. As we always said for the whole year, we had this fair value gap here. We've traded into twice now. We also had this fair value gap here. Price traded into it last year. We ran stops as well. So when we ran stops, broke this structure, I was looking at a low, high retracement back into a discount, and we started to rally higher. But as you can see, the rally short-lived. We traded up into a order block here, and now we're trading lower. So with current market price, I'll draw out the order block that we traded into a few months back in April. So at the beginning of the quarter, if you want to look at it from a quarterly aspect, April, beginning of the quarter, we make the high of the quarter. May, last month, we failed to push above that April high. So now we have a swing high in place. June, we look like we can do a straight shot down into December 2023 bullish order block, even though we did it here in March. Traded down, rallied. This is a swing low, so we can probably trade lower, dig deeper into this bullish order block created in December, and then eventually the rejection block, and then the old low. So let me draw out the order block level. It's been hit before, but we can come back and retest, and we will draw out that 50% as well. Right. So now we have these two levels, and then the last one before the old low would be the rejection block. So 3 levels on the downside for the month of June to trade down into, right? So going into a weekly time frame, what do I see? I seen that the last week of May, it traded above the previous week high into this bearish order block. So if I draw that out, the bearish order block level, we traded up into it, and now we're trading lower. And since we traded up into a internal range liquidity, which is the bearish order block, we're going to obviously look for the external ranges. So this old low and this old low. But I'm going to just use these as equal lows. We can see a rally this week. Going into the daily, a rally lower, so a decline, not a rally. So I'm looking for declines on dollar, but we're gonna get into the dollar versus the Canadian dollar. But we just wanted to show you the dollar index on why we were bearish on the USD versus the Canadian dollar. Monday today we traded up. We traded up into this order block here. This candle, this beefy blue candle. We traded up, not too much, and then we continued lower. So let me just draw out this order block level. Open, created the high today, and now we're trading lower into this old low, into these equal lows over here. Because from this high, or even this high to this low, we traded up into premium. So let me grab a fib. right? High to low, or this high, high to low. Premium price. So now we're looking for the run on sell side liquidity. So that is why we were bearish today on the dollar. So if we're bearish on the dollar, all currencies that start with the USD, we're also looking for a bearish play. So now let's get into the US dollar CAD pair. And since we went over the higher time frame on the dollar index, we'll just stick to a daily time frame and then we'll trickle down into the lower time frames. So daily time frame on this US dollar versus Canadian dollar pair. This Monday candle, we're still trading now. It's 1:30. It's about to be 1:30. So we have the PM session. We were trading um, London and New York. So that's why we were bearish, but it's a bullish candle now, but you'll see. We had this order block just like on the dollar index. We traded up into an order block. So if I mark this out, right? That was my key level for today. And on the downside, in terms of what discount levels I can see price trade into, we had this old low here, swing low, and we also had this down close candle. If you look at the body at the bottom, they're pretty, you know, relatively equal. So when price right here trades down into this rejection block, that's a move, and we trade away from it. Now, this candle, let me zoom in a little bit. These candles here as well are pretty relatively equal. And this candle mitigated this level. So what did I do? Put it on the bottom, using this as a rejection block, and I drew it out. So yeah, we had that old low, and we had that rejection block. So those were my levels for today. So going down into that, let's go down to a 4-hour chart. Or not. All right. So what can you see? Price traded down first on Sunday, below that old low, and into the rejection block on the daily, right? After we traded there, we continued to trade higher and higher, right? When price ran below these lows here, a ton of people thought that this would be a turtle soup, meaning we'll buy sell stops here and we'll try to cover above old highs for buy stops. However, when looking at the lows and highs, you need to make sure that you are at the actual low of the day. Because if you're buying here thinking that this is the low of the day, there's smart money traders like me and my team at Time Precision FX that know that there's going to be another run. Because what do I see here? We have this order block. We start refining the levels. Order block here, trades away, price comes down. Then from here, price trades away. Where's the order block in this range? Right? It's here. It's here. And then going here, I don't know if I explained that right. So we had the order block. We traded down into it. These two candles right here. Let me make sure you guys really see this. These two candles. Disregard the wicks. All wicks are just gaps. These two candles, they're equal body candles. So this is considered a rejection block. Look at the precision, right? If I get the close on this price, where's the close? 1.36029. What is the low on this candle? 1.36029. 0.29. These are the insights that people are lacking and they need to make sure that their timed precision is correct. So that's why you guys need to join Time Precision FX. The links will be in the description, but let's continue to how I actually caught this trade. So we had a level here that I was expecting price to come down to. Reason being, we traded into this order block. So institutions, they bought here and they bought here. So when price is coming back down and it misses that level, I'm looking at this level as liquidity. Okay? Liquidity is basically how fast can you turn over a profit. If there's a lot of people willing to sell down here, if I'm a buyer anywhere above here, then I'll be wrong, right? Because sellers want to sell out, and if they want to sell, they need a buyer to buy it from them. So the only way you would buy is if price came down under the sell stops, gave people who are willing to sell an opportunity to sell, and the only reason why they would be willing to sell is because they have smart money buying price here, giving them contracts and giving them exchange to buy. However, when price goes a little low, they're going to be in profit, willing sellers. But then look how fast the central banks reverse price, catch a bunch of people offside, and that is clearing of liquidity. It was super quick to get these guys to sell, but now they're out of the market because smart money's buying it. I hope that made sense. So when price came below this old low, we were not looking at it as a automatic run on liquidity, reverse the other way, because we knew we still had some price levels to come, like to go down. So when we're trading up into the range from this high, 1, 2, 3, swing high, to this low, 1, 2, 3, swing low, and it's trading up into the premium price, I'm going to grab a Fibonacci, right, and place it on the high, and then place it on the low. Inside of this range, we have the high, the low, the 62% to the 79% retracement is what we like to call the optimal trade entry. And that is not mine. That goes straight to my mentor, ICT. You guys can follow his channel and learn from him as well. But this is basically just a retracement into a premium price point. As a smart money trader, you want to be selling in premium and buying in discount. And I am a smart money trader, and I teach my community to be smart money traders. So when we were trading up into a premium price, we looked over to our left and we noticed a order block, right? Order block with we're combining PD arrays now. Let me take this fib off. So we have the order block with a, what's this? A fair value gap. Let's make this red. So now we have a fair value gap here. So now this order block becomes a high probability order block because it is combined with a fair value gap. So now let's go to the 1 hour chart. Right? So now you see how the market from top down starts to look clean. And you have all your levels. We had this old low. We were not expecting a full-on reversal because we know we still had room to go lower, right? Which was here, that rejection block on the 4 hour time frame. Go back in the video if you guys need to understand how I broke that down. And you guys can leave me a message or a comment if you guys want me to go over that explanation again. So we knew we had more room to go lower. So when we're trading up during the London session, and we hit that 4 hour fair value gap as well as the order block, everything is in our favor to run this old low, which if you go back in the video again, I refer to this old low as liquidity because they created the old low even though they did not mitigate price. So this just becomes liquidity because it's so easy to clear a profit under this low, which I did, and I hope you guys did as well. But if you're not in TPFX, you did not get this trade sent out to you from my lens. So you guys need to join. I have the free Telegram channel. Course is coming soon. That's gonna be the last time I promote TPFX. Just look in the description. Wrapping this video up, we had a high, we had a low. This low was liquidity because we had more room to go lower. I grabbed my fib from the high to the low. And once we're trading up into that order block level, I'm going short here. Right? I'm going short in the fair value gap and the order block. My stop loss, since I'm on an hourly chart, I'm gonna put it over the nearest swing high, which if you look at the level and I go up from this order block level, we have, this is the first swing point that I see. So if we are actually bearish from this level, there should be no reason for the market makers or the central banks to run price up above this old high, right? Because we're bearish and we just traded up into a premium price, 62% to 79% retracement level. So I went short there, boom, and we held price all throughout the London lunch, as well as the beginning of the New York session. London close, usually the low of the day, and we used the 10 a.m. candle for our exit. Where did we exit if we know that price needs to come down here to mitigate? Do we just hold our position from the fair value gap to the predetermined terminus? Well, if you're able to do that and you have a high risk tolerance, then of course you can. But why would you, right? We have a fair value gap right here. Boom. Nice little fair value gap. This right here is a beautiful place to take your profit. Because as you can see, we rallied straight 3 candles down automatically into the fair value gap because it's an imbalance in price. Price needs to come fill it in. So we filled in the imbalance at 8, not all the way. 9, we tagged it a little bit more. And then 10 a.m. being the beginning of London close and usually the opposite end of the range, we rallied through or we declined through the fair value gap, ran out, sell stops, and now we are continuing to go higher. So I hope those explanations just, made you a better trader. Daily charts, okay, guys? Daily charts are going to be your number one friend. Your number one friend if you are a day trader and lower. If you're doing swing trading and higher time frame position trading, you need to be on the monthly time frame and the weekly time frame. But if you're just day trading and you're trying to catch one move per week or a few moves per week, all you need is the daily chart. Maybe refer to your weekly chart every week and the monthly chart every month. But on a daily basis, just look at your daily chart, try to find these key levels. And to show you the proof, I'll just come into this platform, my MT4 platform. Yes, this is a demo account, so no, I can't you can't sue me or anything like that. I'm not a financial advisor. This is just what I'm doing, and I'm promoting my expertise so I can teach you guys in the future. But this is not telling you guys how to trade or how to buy and how to sell. I'm not a financial advisor. But yes, this is the history. We just went in with one lot, right? It's just a demo account just to show you the expertise and actual proof of concept, right? One lot, we went in. I'll just put these spider webs on the chart, right? go to that 4 hour so you guys can see where I got in. As I said, we had that order block right here on a 4 hour chart with a fair value gap. So then going down to the 1 hour, as I said, the stop loss went above this old high. So then if I'm doing my high to low, we trade up into that premium range with the order block, with the fair value gap. We went short. And as I said, why should I wait for price to come all the way down to this old low? It's not necessary for profitability. So what did I do? I just closed out in this fair value gap, right? Right at the bottom. Boom. And then we dragged our stop loss down to a place where if we even get hit out, which we did, we'll still make a decent amount of profit. And that's what we did. Practicing the 70% partial and then the 30% whatever happens, happens. So hopefully this video was insightful. Make sure to join our Instagram, follow us on Telegram. And if you found any insight on the video, like, subscribe, tell a friend. Matt Fractal out.